If you're a practice owner or a practice manager and you're wondering how profitable your practice is, if you wonder why there's no money left over at the end of the month to pay bills, if you're wondering why you can't pay your staff, then you may not be as profitable as you need to be. If that's interest to you, this episode is for you. Watch on. Hi, Dr. Joe Parker here with the Standing Ovation Practice. Thanks for tuning in. Listen, I spent 17 years in private practice and the last 20 years consulting private practice owners and managers just like yourself on how to tune up your practice and make not a good, but a great standing ovation practice. This week, we're talking about the Key Performance Indicator series, and today I want to talk to you guys about profit. What profit is. What's profit? That's that leftover money at the end of the month, at the end of the year, that ultimately is taxable, but you need to start being able to amass to purchase equipment, hire better people, things like that. A lot of people don't think you need it, but you actually, the practices that don't have their fees correct, that aren't busy enough, those are the two principal things, or the third one would be, or spending too much, simply don't have enough profit. What that results in oftentimes is you can't pay your credit cards every month, you can't pay your staff well so you can start losing them, you can't attract good DVMs, you can't cash your own paycheck, you've got suppliers that won't ship to you, all because you're not profitable. So guys, profit is a good thing to have. It's necessary to run a successful practice. Now, how do you track this? This is where you want to start looking and getting to know a monthly profit loss statement. Your bookkeeper, accountant can work in QuickBooks or whatever they're working at and give this to you. Ideally, you want to request it from your bookkeeper at the end of every month, and within that first week of the next month, you've got that profit loss statement in the form of an Excel file. Don't have them send you a PDF because you can't work with it. You want an Excel file so you can crunch some numbers, and ideally what you're looking for here for that leftover money, basically you've got the revenue on the profit loss statement, then you've got your expenses, your kind of 5 major expense categories, such as cost of goods sold, your HR cost, your facility cost, your office, and your marketing PR. So when we've got our revenue and we subtract those 5 expense categories, whatever left over, that's called your profit. And ideally, we want to shoot towards 20%. Now, there's a word that you're going to hear, an acronym called EBITDA. EBITDA stands for earnings before taxes are deducted, before there's any depreciation of amortization, depreciation of equipment or amortization of goodwill. It's before the accountants at the end of the year subtract those tax write-offs. The tax write-offs are the interest on your loans, any taxes, any depreciation on equipment, any amortization of goodwill, the blue sky. Before they subtract that stuff, what you want to look at are those earnings. And on a monthly basis, that's what you're looking at. It's that leftover money. It is taxable. So at the yearly tax filing at the end of the year by your accountant, they do want to subtract, they do want to deduct these expenses to lower this profit because you get taxed on it. But for management purposes and for valuation of practices that we're going to get into in a later episode, we want to look at that basic leftover money, that EBITDA, those earnings before interest, taxes, depreciation, amortization, to use as our management, as our target to get to. And then also when we're looking at buying a practice or selling, we're going to use that and multiply that by what's called a multiplier to get the value of your practice. Okay, guys, so profit is good. We want to shoot towards 20%. We want to be tracking it on a monthly basis out of QuickBooks if you can get that done. And again, this is one on a monthly basis you could start to put into Excel and graph it out. Is the profit going down, sideways, or going up? Then you could start to manage on that. Okay, everybody, hope you like this content. If you did like it, please hit that little thumbs up like button down below. Please subscribe, turn on your notifications, give me a little question or a little note in the comments down below and I'll get back to you. Tell your friends about it. Thanks for watching. I'll see you next time.